Well, good afternoon from the porch.
3, 2, 1.
Yep. Now, we're going to talk today a little bit about what's being affected with the world news with the Russian invasion in the Ukraine and what is going on with interest rates. Of course, that highly affects the real estate market, and as realtors, we want to just keep you abreast of what's going on. I'm Sylvia Ford with Coldwell Banker.
And I'm Sherry Darmanin with Caldwell.
And our colleague and friend Linda did the research for this particular topic today. So she is not with us, but she is indeed with us. So first of all, we want to extend our prayers, and we are thinking of the Ukrainian people. We have people that are over there, friends and family, and other people within our realtor community have people over there. This is a very difficult situation, not just for Ukraine, but for the world. And
Heartbreaking.
yeah, it's terrible. So we are also getting questions from sellers and what does this mean, and buyers about how it's going to affect things in the real estate market and here in our little corner of the world. Well, as far as our little corner of the world, we want to talk about that. So as you know, interest rates were going up, but then after the invasion, the interest rates dropped. So Sherry, help us make some sense out of that.
It's hard to make sense out of that, to be honest with you, because there's so many different opinions out there. But interest rates tend to decrease in times of precarious events, much like they did around the time of the pandemic, beginning of the pandemic, and the peak of the COVID, when the lockdown occurred. When these things happen, investors look for safer places to invest, like bonds or mortgage-backed securities. This lends to a decline in mortgage rates.
Okay.
So, as the investors are investing in other options, then of course it's going to affect your mortgage rates because it's outside of the real estate realm. For global investors, they prefer U.S. Treasury bonds, and consequently, we may see a temporary short-term decline in mortgage rates. Now, I say temporary short-term decline,
Right.
And let's not get all excited and, say, oh, the rates are going down, because, by and large, in fact, we know that the rates are going to start climbing towards the end of the year as well.
And the central bank has an open market committee meeting March 15th and 16th, which is just right around the corner,
Right.
to determine what the next rate move is going to be. So possibly it will change the outlook to move higher.
Higher, right. Yeah, that's very true. So what should a borrower do with things being so volatile? The rates are low historically as they stand now, so we recommend reaching out to a mortgage professional to help get you started and answer any questions. And yes, that's true. We do encourage you to take advantage of the lower rates. I mean, they have climbed a little, but you need to take advantage of the lower rates as they are at this moment.
Right.
Rates have been predicted. The analysts have concurred that interest rates will be increasing as the year progresses. So don't wait and think that, oh, well, rates are going to go lower, or, the housing market's going to change, that kind of thing. It's not, okay? Inventory is going to stay dramatically low throughout the remainder of 2022. Interest rates are going to climb. So if you're looking at buying, you might as well just take advantage of it now, and buy something now while you can take advantage of the lower type rates. So.
Right. And well, that's it for us on this topic. Our hearts and prayers are with the people of the Ukraine, and we'll all join together and hope that we can get through this all together. But as far as the little corner of our world in real estate, that is the most up-to-date information.
Yeah. Well, thank you for watching us on The Porch 321. Please don't forget to subscribe on YouTube and like us on Facebook.
And we'll see you next week.
On The Porch.
3, 2, 1. Bye now.
Bye.